Hello everyone, welcome back to Inheritech, and this video is going to be the most important video that you will ever watch on this channel, because in this video I'll be explaining each and every type of indicators in just only about 1 hour. So even if you're new in trading and you don't know much about these indicators or how they are used, how they are like formulated or calculated, so believe me, I will be explaining these indicators in such a simple language and such a simpler way that even a 6-year-old kid will be able to understand that. So why don't you will be able to understand that? I assure you, I guarantee you, you will be able to predict the market very accurately after learning the whole video. Okay, so let's go back to our computer screen and let's get on to this thing and learn each and every indicator so that we will be able to understand this market more accurately. So let's go. Now there are different type of indicators, as you can see in this PDF. There are trend indicators, that is the simple moving average, okay, the exponential moving average, and other ones. MACD is one of my favorites because it gives the volume and the moving averages both simultaneously. I will be explaining these things later in the video. Other things are the momentum indicators, which signifies the momentum of the market, and the volume indicators, which signifies how much money is flowing inside of the market and how much selling is going on from the market. And volatility indicators include Bollinger Bands and average true range, which I don't use generally, and I don't even use the support and resistance indicators. These things are not my thing, so I'll be restricting my content to trend indicators, momentum, volume, and in volatility indicators I'll be explaining Bollinger Bands, and that's all. So let's go. So number one is simple moving average. So in simple moving average, it's like a line. It's like a line, a slope, like in this picture you can see it clearly that there are 4 lines of different colors, and these are moving averages of different time frames. Okay, this is the graph of stock, and these are the moving averages of different time frames. But there are different moving averages as well. The faster moving average, SMA, is the more sensitive than the slower moving average. The faster moving average moves more up and downs. You can see more up and downs in the faster moving average, and the slower moving average, there will be less up and downs. Okay, because the slower moving average is of a large time frame and the faster moving average is of the slow time frame. Okay, so it moves with the price of the stock, or my favorite cryptocurrencies, of the coins or tokens, more sensitively. So the faster moving average is more sensitive as compared to the slower moving average. Okay, so how can you apply these moving averages? So I'll be explaining you like a kid. As I already told, open the Google and just search tradingview, and press enter, and your TradingView will be loaded like this. Okay, and then when it is loaded properly, there is a search bar given here, and you have to search here what, like my favorite is Bitcoin. I trade in Bitcoin generally, so I'll be using Bitcoin to make you understand about these indicators. So the chart of the Bitcoin is being loaded, and then here we go. The next moving average is the exponential moving average. So you may be wondering what is the difference between the simple moving average and the exponential moving average. So I'm going to tell you one thing, that exponential moving average is another form of simple moving average, and in this one logarithmic formulas are used. In simple moving averages, you just take the average price of a particular time frame, that's it. But in exponential moving average, in the mathematical formula, the logarithmic equations are used, which makes this moving average more sensitive as compared to the simple moving average. So which one is better? My preference is exponential moving average, and I will suggest you to use exponential moving average always. So let's go. So this is a chart of Bitcoin. I'll be ignoring all the ads, and we have to apply the exponential moving average. So how can you do that? So as you can see on the top of this panel, indicator tab has been given. So click on that and search exponential moving average. Okay, but in this trading view, I'll suggest you to use the double exponential moving average, because in this one I'll be clarifying that. Search DEMA. So you will get a double EMA over here like this one, and click on this one. Now let's see. So here we have it, the double exponential moving average. You see this green colored line, tickling over here and there is the double exponential moving average. Okay, and we have, this is 9-day double exponential moving average. As you can see here, DEMA 9 and close. You can also apply settings from here. You can change the time frame if you want a 200-day double exponential moving average. So you can write here in the length, ignoring all the ads of course. You can write here in the length 200 and press OK. Now let's see. This green color line is shifted like this, and you can see that the 9-day double exponential moving average was more sensitive. It was moving more like up and downs were more. Up and downs were happening more frequently in the 9-day double exponential moving average, and in the 200-day double exponential moving average, the up and downs are not happening that frequently. So this is the average price of the 200-day. That's it. So we have it, and you can apply the double exponential moving average of 9-day here as well, but I will suggest you to use the double exponential moving average of 50-day with 200-day. So you have to type DEMA and then enter, and here is the double exponential moving average of 9-day. As you can see here, you can go to settings once again, as I have already taught you, and then change the length, which is 50, and press OK after that. You can see it here, the blue line. Look at the blue line here. The sky blue line is the double exponential moving average of 50-day, which is more sensitive, which is more prone to up and downs as compared to the 200-day moving averages. Okay, so how these things are useful to us, how you're going to be predicting the price movements with the help of these exponential moving averages. Now, I will be teaching you one thing. We look for crossovers over here. If the faster moving average, which is the 50-day EMA, okay, crosses the less sensitive moving average from below, like from here, in this one, let's find out where the crossovers have happened. Here, obviously, as you can see it here, the double exponential moving average of 50-day, you can see it over here. Okay, see where my cursor is. The DEMA of 550-day has crossed the DEMA of 200 days from the below over here, and then you can see the prices have gone I don't know how much up. The prices of Bitcoin moved from $47,000 to $65,000. Oh my god. So this is the magic of the exponential moving average. Whenever the crossover happens, just look for crossovers in double exponential moving average. If you're a long-term trader like me, so you can use this setting, the 200-day and the 50-day double exponential moving average always. So this was the exponential moving average thing, and let's go to the next one. Like in the PDF also, here it is written that both EMA and the SMA here are present 30 days, and EMA reacts faster. EMA, exponential moving average, reacts faster than the simple moving average. Okay, as I've already told you, and the subsequent rally begins. Let's check out the next indicator, which is the moving average convergence divergence. Many people call it MACD, or I call it MACD. MACD is a momentum oscillator primarily used to trade in trends. So in MACD, what happens is there are two lines in MACD as well. You can change the setting of MACD as well. There are volume charts in MACD as well. Okay, so MACD crossing above the zero line is considered as bullish. Now I'll be applying the MACD in my graph, otherwise you will not be able to understand it. So let's cut out the double exponential moving averages and search for MACD, which is MACD. Okay, so here we have it, moving average convergence divergence. Click on this one, and here we go. This is the moving average convergence divergence. In MACD, you will also be looking at there are two lines. Okay, two moving lines, like one line is the blue line and another one is orange line. In MACD, let's see the time frame of these two lines. The fast length, like the blue line, you can see the fast length is blue line because blue line is obviously tickling more sensitively. The more the ups and downs in a line or in an indicator, the more sensitive it is, and the more sensitive it is, the lesser time frame the indicator line is having. Okay, and the less ticklings or the less the ups and downs are happening in an indicator, the higher or the larger the time frame of that indicator has been selected. So that's it. Okay, in this MACD setting, we are having the fast length, which is the blue line. As you can see here, blue line is having fast length of 12 days. It is the moving average of 12 days, and the slow length is the moving average of 26 days. Okay, and which moving average it is it the simple moving average or exponential moving average? So you can see it here, it is the exponential moving average, EMA. In this setting it has been written over here, you can see it clearly. So and here also in this setting, and you can change it, you can shift it from EMA to SMA anytime, but you don't have to do that because EMAs are more sensitive than SMAs. Ignoring the ads. So let's go. The volume, another thing that I want to explain you is the volume of the MACD. What volume of MACD suggests? If the volume is downwards, it suggests the selling pressure, and if the volume is upwards, it suggests the buying pressure. But before that, I want to conclude one thing about MACD is that the crossovers in simple moving average and exponential moving average, as I've already told you, signifies this upward momentum or downward momentum. In the MACD as well, the crossovers signifies this upward momentum or downward momentum, like over here. Look at here, the crossover has happened from the downward side. The fast moving average has crossed the slow moving average from the downward side. You can see it over here, the blue line has crossed the orange line from the downward side. Okay, crossed it. And let's see in the actual graph of Bitcoin what happened. Let's see. So this is the graph of Bitcoin, and here the crossover has happened. Okay, here the crossover happened, and there are two green candles formed over here. You can see it here. One is 2.82% and another one is 2.32%. So it's like about more than 5% of profit in 2 days. Here also crossover happened. At this place also the crossover has happened, and the prices have gone up in a very huge, huge power. The prices have gone up. So this is the power of MACD as well. You can predict the market by MACD. So this was MACD, guys, and I will also try to explain the volume thing. Till the volume is rising, till the bars are dark green colored, you will be in the safe zone. But if the bars are getting light green colored, it means that the selling pressure is rising. So it's a signal that the trend reversal is gonna happen. You can sell at that time. Okay, when the bars are shifting its color from dark green to light green, you can sell the thing. You can sell your asset at that time, because the downtrend can happen. And over here, look at here, the bars are dark green colored. Until here, a green candle of 3.96% has been formed, and after that a red candle of 0.91% has been formed. And after that, we see that the buying volume is decreasing. Okay, and it may go downwards. When the selling pressure will rise, it may go downwards in the downward side, and red candles can be formed in the downward side. Okay, so that was it, guys, for MACD. Let's go and check out the next indicator. The next indicator is Momentum indicator. So momentum indicator tells us that whether the market is gonna go up and gonna go down in the next few hours or few days. The boundary indicators are also called oscillators, and when oscillator reaches a zone close to its highest bound, it is called overbought, and when it reaches the zone close to its lowest bound, it is called oversold. So let's see some oscillators over here. We will search for stochastic oscillator. The first oscillator is stochastic oscillator, and stochastic oscillator is one of my favorite indicators because it tells us that whether the market is overbought or oversold in the current scenario. So let's go check it out. Stochastic oscillator, in the indicator tab you can check out stochastic oscillator. Just search for stochastic. Look, here is stochastic. Apply that, click on that, and here we have it. This is stochastic oscillator, guys. And let's see the setting of stochastic oscillator. The setting is 14-day and 1 day and 3 day. So we will be having the setting of 14-day and 3-day in the stochastic oscillator. In the stochastic oscillator also we are having two moving lines. Okay, one is blue colored line and another one is orange colored line. In the stochastic oscillator, as you can see, it tickles between generally it tickles between 80 and 20. If the stochastic chart moves above the 80 range, it is considered as overbought market. The market is overbought and trend reversals can happen at that time. So whenever stochastic oscillator reaches more than 80, you can consider that the market is overbought at that time. And whenever stochastic oscillator is below 20, you can say that the market is oversold at that time. So after being oversold, the market can go up, and after being overbought, the market can go down. So that's it, guys. That's what we have to learn from stochastic oscillator, and let's check some of the examples. So here it is. Now you can see that the stochastic oscillator chart was at 7.52, highly below 20 range. And at this point you can see the market has gone up. A green candle has been formed of 7.54%. Another green candle has been formed of 9.62%, and then the market has gone up like hell. So this signifies an upward trend in the stochastic oscillator if the oscillator is below 20. Now this is the chart of Bitcoin, and the stochastic oscillator is currently at 85. So can we consider that the market is overbought at this moment? Yes, we can, obviously. So what should we be doing? Are we going to be selling our assets or not? It depends, guys. It depends on many situations. By stochastic oscillator you can predict that the market is overbought, oversold, but you cannot predict that you have to sell it right now. Okay, but you can go for a long-term trend if the stochastic oscillator is below 20, and genuinely saying that if you're having some assets of Bitcoin right now, you must be selling that. Now I have one special thing for you. You have learned how the indicators work. Well, there are other indicators as well that I will be explaining, I know, but I will be explaining one special thing to you, which is known as divergence and convergence. So this thing happens generally in MACD. Here you can see in this chart, in the stochastic oscillator, what happens is the price movements are going upward. As you can see it over here, the price movements are going upward. Okay, and in the MACD, the indicator, the price movements are going down. The price movements, not the indicator, is going down. So which thing are you gonna be believing? Because there is a divergence over here. Okay, there is a divergence over here. You should be believing the movement of indicator, because smart money flows in the market whenever the divergence happens. What is smart money? Smart money is that amount of money which gets into the market, but the price movements are not affected by that. But indicators recognize the smart money and show the reaction. And let's see what happens after that. The price movements are here going upward, and the indicator movements are going downwards, and after that the price movements also gone down. So many people will believe that the price movements are going upward, so it's an upward trend, but imminent price reversal is happened over here, and you can see that stochastic oscillator has fallen down after that. So whenever you see these kind of divergences, sell your assets immediately. Okay, sell your assets immediately, because a reversal trend can be upcoming. But what if the vice versa thing happens, the price movements are going downwards and the stochastic oscillator is going upward? In that case also, the smart money is flowing in the market. Okay, smart money don't affect the price movements, but the indicators recognize that. So at that time, you will be buying the assets. If the stochastic oscillator is moving upward and the price movements are going downward, so an trend reversal is imminent. At that time, you must be purchasing. So in convergence and divergence, these are things are vice versa to themselves. So let's move on to the next indicator. Let's see what is the next indicator. The relative strength index. This is the one of the most important indicator in the entire market history, because I love this indicator and I will be explaining this indicator like yes. So how it works, the RSI oscillates from 0 to 100. Now first of all, let's apply RSI in our chart. Okay, in our Bitcoin chart, let's go and apply RSI. So in the indicator tab, let's search RSI. So here it is, the relative strength index. You can see it over here. So I have applied that, and this is my relative strength index. In this thing, I will be changing the style of this one, because I don't like the yellow color. I like the, some dark color, like red one. So this is the RSI. You can see it over here. In RSI, there are two settings, two lines. One line is RSI line, which is 14-day RSI, as you can see it over here. This is the relative strength index of 14-day, and there is a simple moving average. You can use exponential moving average. So let's go. We can select here from SMA to EMA and then apply it. You see the settings have changed, and the line of the moving average has flipped slightly. So now here we have it. Let's see what the PDF says. The RSI oscillates from 0 to 100, and traditionally the RSI is considered overbought when it is above 70 and oversold when it is below 30. So generally here we are having a frame of RSI in which 70 is over here and 30 is over here. Look, the entire market indicators have an ability of tickling around 0. Okay, around 0 means the 0 point, the null point. Like the null point of RSI is about 30, is about 50 over here. Okay, is about 50 over here. If RSI goes up, it will go down again. Okay, RSI will not stay up forever. So if RSI is above 70, the market is considered overbought, and if RSI is below 30, the market is considered as oversold. So here you see the RSI got below 30, and the guys who have purchased assets at this time, let's see how much profit they would have made in Bitcoin. 7.54%, 9.62%. There's a huge amount of profit they would have made if they have purchased when the RSI was below 30. So this is the magic of RSI, guys. In RSI also, you can go for crossovers. If the crossover has happened, if the RSI has crossed the exponential moving average from the upward side, okay, then the market is gonna go down. And if the RSI has crossed the exponential moving average from the downward side, the market is gonna go up. So that's it for RSI, guys. And this is the overbought and oversold signals from RSI. Here we have it in the PDF also. At below 30, the RSI is oversold, market is oversold, and above 70, the RSI considered as overbought. And in this RSI also, the divergence has been seen. Look at here in this PDF, the price movements are going downwards, but the RSI suggests the price movements would go upwards. And after that, the trend reversal has happened and the price movement have followed the indicator movement. So always go for indicator movement, and divergence are one of the best situations where you can make a lot of profit. So let's move on to the next indicators and let's see what's the next indicator, guys. The next indicator is on balance volume indicator, which I generally don't use at that time that frequently, but for making you satisfying you, I will be explaining that as well. So we have to search OBV, on balance volume indicator. So here we have it, guys, on balance volume indicator of SMA of 5-day. So we'll be selecting exponential moving average instead of simple moving average over here, and then applying that. SMA is an excellent tool to predict the trend of the market. Okay, let's see what the PDF says. Concentrate on its direction. Okay, when price continues to make higher peaks, OBV fails to make higher peaks, this is considered as divergence. The upward trend is likely to stall or fail at this time. This is called negative divergence. So you must be selling that at that time. So let's see it, guys. Is there any divergence has occurred? Negative divergence in OBV. Here we have it. The price movements are going upward and the OBV is going downward. Then thereafter an imminent trend reversal has happened. So like this, you can see the divergence in OBV as well. So that's it, guys. That's it for on balance volume indicator. So the very next indicator that I have to explain is the money flow index. Okay, the money flow index. So as I have already explained, the RSI, which is the relative strength index, it have its own mathematical formula. Okay, similarly money flow index also have its own mathematical formula, and it is very much related to the relative strength index, but it incorporates the volume movement as well. So money flow index could be considered as more accurate as compared to RSI. It can be considered, but it is not sure. So money flow index is a volume indicator that measures the flow of money in and out of a security over a specified period of time. So it measures the volume volume of money that flows into and out of a security. Means you can also consider that as an asset. If you're buying a stock, it is also considered as a security or asset. If you're buying some cryptocurrencies, or if you're trading in forex, that is also considered as, security and asset. So money flow index, how it works is oversold levels typically occur below the 20, like in RSI also oversold levels usually occurs below 20. In MFI also, if it is below 20, then oversold levels occur, and overbought levels typically occur above the 80, and these levels may change depending on the market conditions. How it changes? If the MFI is tickling over the higher levels, then it can be considered that the market is like oversold or overbought, something like that. And let's see the MFI over here. So ignoring all the ads, and let's cut out OBV and search here money flow index. So we are going to be searching money flow index. So here we have it, guys, money flow index over here. So this is a very much of a simpler thing, and in the settings you can adjust the money flow index, length of the money flow index. You can, if you're trading for long term, you can set the money flow index at 200 length, and here we have it, 200 length money flow index. So this is it. These are the levels of money flow index over 200 days. But if you're trading like over short term or medium term trading, then keep it around 14, and in 14 here we have it. Right now the money flow index of Bitcoin is above 80 level. Okay, it is at 82.15. Okay, so this situation of Bitcoin is considered as an overbought situation. Okay, if it falls below 20, then it will be considered as an oversold situation. So that's it guys for money flow index. And the very next indicator that and one thing I've missed in this is the divergence. The money flow index can also be telling you the divergence, as I've already said. Like look here, the price movements are going upwards. This is the price moving going upwards, and the money flow index at the same time is having bullish bearish divergence. Okay, actually this one is the bearish divergence. Okay, and this one is the bullish divergence because the price is going downwards and the MFI indicator is going upward. So if MFI indicator goes upwards, eventually the price will also follow this action. So that's why this is a bullish divergence and this is a bearish divergence. You can see here the bears have got very high, and here the bulls have got very high eventually. So the next indicator is accumulation and distribution. As you can understand by the name of this indicator, accumulation means money inflow, and distribution means selling of the assets. Okay, so accumulation and distribution looks at the proximity of closing prices to their highs and lows of determining if accumulation and distribution is occurring in the market. Okay, so how it works: when the both price and accumulation distribution are making higher and higher peaks and higher troughs, the uptrend is likely to continue. So this is basically the price is in agreement with the indicator. The indicator is making higher and higher highs, and the price movements also getting higher. So this uptrend is gonna be continuing. So basically divergence occurs when the accumulation distribution are making lower peaks. Okay, this is making lower peaks and lower troughs, and the downtrend is likely to continue. And if the price, even if the price is making higher highs, then the downtrend is gonna be coming very soon. And when the price continues to make higher peaks but the accumulation distribution fails to make higher peak, the uptrend is likely to stall or fail. This is known as negative divergence. Obviously I've already told you about these things. And when the price continues to make lower troughs and accumulation distribution fails to make lower troughs, the downtrend is likely to stall or fail. This is known as positive divergence. So positive and negative divergences are vice versa of each other. So look, this is the chart of Bitcoin and this is the indicator, the accumulation distribution indicator. So it is a trending market of Bitcoin, which is right now moving upwards. The trend of Bitcoin is likely to go upwards, and you can see if I apply here a trend line, you see the trend is going upwards, and this one also, the trend is going upwards of Bitcoin. But right now the accumulation and distribution indicator is not clear about in which direction it should be moving. The market is not moving in either of the direction. So let's see in which direction the breakout of Bitcoin is going to happen. With the help of accumulation and distribution, we can predict that there is a long-term uptrend of Bitcoin right now, since the prices are also going upwards and the accumulation distribution indicators. I want to tell you one thing from this chart. You see that in here in Bitcoin was moving downwards, but accumulation distribution indicator was going upwards. So BTC moved downwards for some time and then it bounced back. You see here BTC has bounced back. It was moving downwards, but accumulation distribution was moving upwards. This is called positive divergence, and here is a live example. What can be a better example than this one, guys? So don't take accumulation distribution lightly, since it can have a huge impact on your trading profits and losses. So the very next indicator we have are volatility indicators, and the first volatility indicator is Bollinger Bands. Bollinger Band is one of my favorite indicators when it comes to predict the breakout. At which point of the market the breakout is going to happen. Bollinger Band can help you to predict that. But first, let us define what are Bollinger Bands. This is a type of price envelope plotted against a standard deviation level above and below a simple moving average of the price. Bollinger Band helps to determine whether the prices are high-low on a relative basis. Okay. How to determine prices with the help of Bollinger Band? When the bands tighten during a period of low volatility, it raises the likelihood of a sharp price movement in either direction. So first of all, let's apply Bollinger Band. After that, you will be able to understand how it actually works. So in the indicator, we have to search BB. BB stands for Bollinger Bands. So here we have to click on this one, and here we have it. So see guys, this is the Bollinger Band. Look here at this point, you can see it, that the Bollinger Band was very narrow. The two bands, the upper band and the lower band, were very narrow, and after that the prices moved upwards sharply. So whenever the Bollinger Band becomes very narrow, the price breakout will be happening. Okay, here also the Bollinger Band became very narrow and the price breakout happened in the downward direction. So Bollinger Bands can help to determine the breakout in either of the direction when you use this indicator in combination with some other indicator like RSI or any momentum indicator, which can signify the momentum of the market. If the two levels or the two bands of the Bollinger Band are very narrow at any particular amount of time, and you use a momentum indicator, and if the momentum indicator is predicting that the market will go upward, then the breakout can possibly happen in the upward direction. But if it predicts the breakout in the downward direction, then the breakout can happen in the downward direction. Okay, so that's it guys for Bollinger Band. But we should be checking some of the more, when the bands separate by unusually large amount, volatility increases and an existing trend may be ending. The next point is one of the most important points while learning about Bollinger Bands. Look, right now in the Bitcoin, oh my god, the two bands of the Bollinger Bands are separated by a large distance. So this is a clear indication, we have got it right, that the uptrend is not continuing. Uptrend is not going to continue more, because already the volume of the money which is flowing in and out of this Bitcoin thing is very high, and right now the unusually large amount, the volatility increases and an existing trend may be ending. So what is the current trend of Bitcoin? According to which was the indicator that we were using previously, the accumulation and distribution indicator, which signifies the signifies the trend of the any asset. So we have to apply that once again, and with combination to accumulation and distribution, we are going to be predicting the current trend of the Bitcoin. So the accumulation distribution tells us that the trend of the Bitcoin is likely to go upwards. The trend is bullish trend, but the Bollinger Band have become very wide on here, and Bitcoin is also like not going upwards. It is facing a heavy resistance at $28,000. Like this one is the resistance of Bitcoin right now at $28,000. Previously also it faced a resistance over here. This was a very strong support of Bitcoin, like you can see over here. The stronger the support, the stronger will be the resistance as well. So it may not be able to break this resistance in the upward direction. Bitcoin can go back to its own 25,000, or it can tickle into this range. Let us extend this. So here we have it. It can tickle into this range like a snake, like this one. And don't get it seriously, this thing can happen. Okay, so that's it guys for Bollinger Band, and I hope you understood how to use Bollinger Bands. So here is an example from this PDF, the riding upper band and the oscillating between bands and the bands narrowing from each other. Look, this is the thing where the stock prices were riding the upper band, and when the stock prices were tickling between the two bands. Okay, and oscillation between two bands were happening. band narrowing. I have right now shown you the two examples, both of the examples of band narrowing and bands widening, and I have also shown you how to analyze Bollinger Bands with in combination with accumulation distribution indicator. You can use other indicators as well to combine, and you can predict the market at this point of time. So that's it, guys. That was the teaching of all the indicators have been done by myself, and hope you were able to understand what different kind of indicators are all about and how different indicators work in combination with each other. Now it is time for the examples. I will be doing the real analysis in front of you, which is my original thing. So like this one, this thing I have already done, the Bollinger Band. Here Bollinger Band was narrow and a great breakout has been observed. Now if you are new to trading, you may not be knowing how to put supply and demand zones in the chart patterns. So I will be making a separate video on that, but for this sort of thing, I have made a different support level. I have made different support levels in this chart of BTC USDT. So this is the Bollinger Band, and now we will be looking at the previous trends. Now let's see what happened over here. Let's see. So here the price movements were touching the upper band of the Bollinger Band, and after crossing a certain level, the price movement was touching the middle range of the Bollinger Band, which was the moving average of the 20-day moving average. The price touched here, and it again touched the upper band, and then it fell down in the lower band of the Bollinger Band, and again it touched the upper band. And so this kind of things keep on happening. But right now, since the Bollinger Band is of average width, since the width of these two bands, like here here is one band up, and here is the upper band, but we cannot see a place where the Bollinger Band is having some sort of abnormal width, like very narrow or very wide. So in this kind of scenario, Bollinger Bands may prove useless. Now here the Bollinger Band became very narrow, and here was a resistance line. According to this chart pattern, it was a support line. This line was a support line. So let's see, according to the different indicators, what should be happening over here. At this point, let's see, the stochastic oscillator was at above 70. The stochastic oscillator was above 70 at this point. So if the stochastic oscillator was above the 70 level, it was a signal that the huge amount of buying has been done already, and the market is overbought. So the breakout must happen in the downward direction, because the market was already overbought at this time when the Bollinger Band was very narrow. So in future, like this, if something happens like this in future, again the Bollinger Band became very narrow, and you are predicting that in which direction the breakout will be happening, you can check out the stochastic oscillator and other volume indicators, okay, which I have already explained you, to get an idea about the situation of the market, the amount of money flow in the market, whether the market is overbought or oversold. If the market is overbought, if according to the other indicators, if the market is overbought, then the breakout may happen in the downward direction. Okay, because if the market is overbought, huge amount of selling can happen. And whenever Bollinger Band becomes narrow like this, breakout is necessary. Like here also. This is also a very, good example of breakout. Here Bollinger Band became very narrow and the breakout happened in the upper direction of 3.88 and 3.44. So it becomes a total of more than 7%. Okay, this breakout was more than 7%. So if you entered the market at correct time at this state, which was Monday 24th October 2022, then you would have made a profit of more than 7%. Now at this point, let us check the range of stochastic oscillator. At this point, the stochastic oscillator signifies that the market is overbought. 96, the stochastic oscillator is at 96 and 95 range, and here you can see the breakout happened in the downward direction. Market fell, market crashed by 9.9. let us suppose that as 10% in the first day, and in the another day it was 14.15% of God. That's a huge amount of loss for the Bitcoin traders on that day. But as you can see, these two candlesticks have been formed over here, and I will tell you the magic of the support levels. You can see one support level is over here at $18,361. The first candlestick tried to penetrate, tried to break this level of, you can see it here, the blue line is $18,327. Okay, but it was it was penetrating that, but then it retraced back. So you can see a tail over here, and then it retraced itself back. In the another attempt, it crossed this line and fell to the support zone of 15,900. So this is a clear example, guys, how these support zones work. You can predict the market very well by applying these support zones, the Bollinger Band indicators, and using that indicator in combination with stochastic oscillator, or if you're using these two things like Bollinger Band and stochastic oscillator. The great strategy that you can follow is of breakouts. But if you trade in cryptocurrency, just only one breakout is enough to make you a huge amount of money. You can make a monthly income by just only having one breakout. So if you predict the proper breakout, which is bullish breakout, then you can make a sort of monthly income in just only 1, 2, or 3 days by trading properly with Bollinger Bands and stochastic oscillator. Okay, so this example will be of the Bollinger Band breakout and the RSI crossover. First of all, let's change the settings of the RSI. I don't like the yellow color of the moving average, so I will be applying the red color or pink color of the moving average and increasing the width of the line. So here we can clearly see the moving average, exponential moving average of RSI, and in Bollinger Band we are having here a very narrow level over here, very narrow band over here, as you can see. So we are waiting for the breakout to happen. So in what direction the breakout can happen? So let's check the RSI. Since RSI is also a momentum indicator, it can indicate the direction of the market, in which direction the market should be moving. So here was the narrow level of the Bollinger Band, guys. This was the narrow level of the Bollinger Band. So the RSI, the 14-day RSI has crossed the simple moving average. Oh, I'm still using the SMA. Let's apply the EMA. By the way, EMA is more reactive as compared to SMA. So this was the thing. You can see that the RSI got down and then crossed the EMA from the below side. And then it goes up. And as you can see it over here, the Bollinger Band has been broken. The upper level of Bollinger Band has been broken, and this level of what was the level? The level of $18,000 has been broken, and the next target was obviously $21,000. And how much profit has been made by this breakout? 5%, 5.75, and 5.14. So it's approximately a 15% of profit over here. And here also a support zone you can also make. So here you can also make one support zone. This may not be that much strong support zone, but you can make it over here. Okay, so this is a support zone over here, and here also you can see the support zone crosses this part perfectly. And if you extend it over here, till this part, the support zone works very well. This range works very well, and here it don't work that much well. So let's take it over here. So in this setting, guys, I will be explaining another example, and this example will be of exponential moving average, how to use the exponential moving average. As you can see in these settings, I have used double exponential moving average of 200-day, which is the green line. So you can note it down that the green line, this line, you know, this green line is of double exponential moving average of 200-day, and the 50-day exponential moving average is the blue line. Okay, and the 20-day exponential moving average is the yellow line. So I have already told you, whether it is in RSI or in stochastic oscillator or any other, you know, indicator, whether it is MACD or any other thing, especially in this one, exponential moving average, the crossovers are very significant. There are other methods to trade in the exponential moving average as well, but the crossovers are the most important you know, aspect that we should be looking at. So predicting the price movements of Bitcoin, we should be looking at the double exponential moving average of 50-day and 20 days. So here we have it, 50-day, the fast moving average, the more sensitive one, the double EMA of 20-day. The yellow one has crossed the, you know, exponential moving average of 50-day. Here the crossover, as you can see it clearly, here the crossover has happened. Okay, the crossover happened from the below side, and in one day a green candle has been formed, which is of 9.59%. So this is the magical thing that works with double exponential moving average, you know. In just only one day, the crossover happened and a green candle has been formed of 9.59%, guys. The next crossover that I have to explain is this thing over here. Here also the yellow line has touched the blue line, that is the fast moving average of 200-day has touched the slow moving average, you know, slow exponential moving average of 50 days, and it bounces back over here. So whenever a bounce back also happens, the market gets a bullish momentum, the market goes up in the, you know, bouncing back as well. Let us see what else we have in Bitcoin chart. And if you're a long-term trader, you should be looking at the crossover of the 200-day exponential moving average and the 50-day exponential moving average. So let's see the 200-day exponential moving average and 50-day exponential moving average crossovers. Let's find out where the crossovers have happened. The green line is the DEMA. We should be checking the historical movements of the Bitcoin for these crossovers, because Bitcoin is bearish right now. So here we have it. Look at here, at this place. See, all the three EMAs have crossed the 200-day exponential moving average from the below side, you know. So this is a great indication that the market is going to go up at this point. You know, you can clearly see that the yellow line has also crossed the green line from the below side, and the, you know, blue line has also crossed the green line from the below side. So lastly, guys, I want to give you my own personal bonus round in this one, and the name of the token is Shiba Inu. Okay, you may have heard of this meme token in cryptocurrency, and this is one of my favorite tokens in crypto, the entire crypto. Why? Because this one is very volatile as compared to Bitcoin as well. When Bitcoin goes up, the Shiba Inu follows the momentum of Bitcoin and follows the path of the Bitcoin, and it goes, if Bitcoin goes up by like 5%, Shiba Inu goes up like by 10%, 15, 20%, something like that. So Shiba Inu is my one of the favorite meme tokens. and in cryptocurrency, apart from Bitcoin, Shiba Inu is my favorite one. So I will be giving you example by analyzing the Shiba Inu token with the help of indicators, which is I was analyzing in Bitcoin the 3 indicators, or double exponential moving average of 200-day, exponential moving average of 50-day, and of 20-day. Now I want to tell you one thing, that this chart is a 4-hour. You can see the time frame over here, the 4-hour, and in Bitcoin the time frame which I was using was 1 day time frame, that was 24 hours. So what I see is that the in exponential moving average of 200-day will be of no use over here, because this is a very long term indicator. This is not that much short term, so we can use even the 50-day and 20-day exponential moving average is also a very long term trend indicator for in the 4-hour time frame. But I will be using those 2 indicators in this one, and so we have to get through this properly, since we have to understand this thing properly. So let's go. Now here, as you can see, I have drawn different levels, and if you don't know how to draw these levels, then I will be making a separate video on supply and demand trades, so that you will be able to understand which zone of a particular token is a supply zone, or a stock is a supply zone, or which zone is the demand zone. Now let us see the movement of indicators. First of all, let us cancel the 200-day exponential moving average, because it is of no use over here. And here we have it, the 50-day and 20-day exponential moving average. So here you can see in the 4-hour chart, the yellow line is the EMA of 20-day, which is the fast moving average, and it has crossed the blue line, the sky blue line, which is the EMA of 50-day from the below side, and then the price of Shiba Inu goes up. Why do these things happen? If the slow exponential moving average crosses the is crossed by the fast exponential moving average, why does the price goes up? Look, I have to tell you one thing, that the exponential moving average, which is having a larger time frame, shows the exponential moving price of any asset over 50 days. Okay, and in the exponential moving average of 20-day, which is of less time frame as compared to that 50-day moving average, shows a average price of a particular asset over 20 days. Okay, so if 20-day moving average goes up and crosses the 50-day moving average, then an uptrend may be indicated. Why? Because on a time frame of 20 days a bullish trend is going on, and this bullish trend surpasses the trend of the 50-day. So for few days this trend may occur. So here we see this thing has crossed. Here the crossover has happened over here. You can see it clearly. Okay, after this video you'll be able to analyze these things properly. Okay, so as we move towards the end, so this example will be one of the best examples. The crossover has happened, and then the price of Shiba Inu goes up. You can see it over here. And for the downward trends also, let's see where the crossover happened. Here the crossover has happened over here. Here the signal has initiated that the downtrend is gonna be happening, and look here how much heavy downtrend has occurred. So you can understand the power of these double exponential moving averages, and you can understand these things clearly. So as we move towards the end of this video, I will be giving you one more bonus thing. I will be using which indicator? Let's go. We will be using MACD, MACD. Okay, moving average convergence divergence, with these 2 exponential moving averages. So here we have MACD. In MACD also, oh, here it is. Now the MACD is in the lower side of the zero line right now. Okay, MACD, 12-day MACD and 26-day, 9-day EMA. the MACD is in lower side of the this line, zero line. So what can we predict from this one? That MACD always tends to go back to the zero line. Okay, so if these two lines, that is the blue line and the orange line, goes back to the zero line over here, an uptrend may be an indication. So Shiba Inu may go upwards. Okay, and here I want to draw more levels in Shiba Inu. Like I select this one, and sorry, not this one, like this. But first of all, let us adjust my graph, and here we have it. Let us select and move from here to here. Okay, this is one trend line, and let us select this one and move it from here to here. Now, as you can see it over here, this trend is going to be broken. This trend is going to be broken right now. This range, as you can see it here, the Shiba Inu is tickling or getting ups and downs in this range, and here we don't have much space over here. Okay, so what we see here is that Shiba Inu will not move more forward in this range, okay, because there is not much space. Shiba Inu will break in either of the direction, and it is sure. So let us predict with the help of some indicators. The moving average is not currently signifying any kind of strong momentum in either of the direction. As you can see, there is no crossover over here. No crossover has happened. So let us try to understand the MACD thing. In MACD, the crossover has happened by the blue line. Okay, and the blue line is fast moving average, and the orange line is the slow moving average. Okay, so crossover has happened over here, and an uptrend may be an indication, but just only using MACD is not sufficient. First of all, let us close this double exponential moving averages because they are of no significance right now, and apply the RSI. So let's search here RSI, relative strength index, and here we have it, RSI. And let us change the color of the RSI first, from this color to this color, and change the width as well. Okay, that's it. Now here also you can see that the RSI has crossed the SMA of 14-day. Now let us change the inputs. Let us change the SMA from SMA to EMA, which is more accurate. The EMA has also been crossed by the RSI, as you can see here clearly. So this may be an indication of an uptrend, upward breakout. Now check out the next indicator, which is Stochastic Oscillator. Stochastic. Oops. Here we have it, Stochastic. In the Stochastic Oscillator also, the fast moving line, which is the blue line, has crossed the orange line. So Shiba Inu can go for a big breakout in the upward direction. This prediction is not very accurate because none of the predictions are accurate ever. Okay, so this thing can happen. So I hope you have learned many things from this video, guys, and I hope you like this video. Then please hit the like button. So that's it for this course, guys. Okay, I hope it added some value to your knowledge, and hope you'll be able to trade more properly after learning about these indicators. So that's it, guys. Thank you so much for watching this video, and thank you so much for having it to the end in this course. Thank you so much. It means a lot to me.